Good evening. This is Duane Lowry for the DPP Grain Desk on Sunday, November 10th. The outlook for tonight is trade on both sides. Early week strength will find selling, especially in corn, to a lesser extent in beans. Friday's reports may be behind us, but nothing has changed in terms of bearish general trader sentiment. They might be making room for some corrective strength potential, but they view the market as having no hope for any prolonged uptrend, and they fear even lower prices in the months ahead. So I think that you got a situation here where we are probably going to test last week's lows again. We may even jab them, but in my opinion, we're not going anywhere. Even in the last 45 days, we haven't had significant downside progression, and many of the last several days were eclipsed with just one relatively small corrective day here in corn. And as far as beans are concerned, we're at the towards the upper end of trading parameters of the last 60 days. So the bottom line here, as far as I'm concerned, is the market is dialed in this bearishness. The supply side is old news. It's factored in. From here forward, we're going to be talking about demand projections or demand activity. Carryout levels are probably shrink in the months ahead. U.S. domestic use on corn exports, both are probably going to be raised even more than they were on Friday's reports. So I think you've got a situation here where you found the bottom side of parameters for prices in corn between now and March at least. If you're going to go to lower levels by a significant way than where you're at now, it's going to occur something from spring forward. It's not going to occur now through the winter months. This sets the stage to have potential for corrective rally in corn. I personally think having a 50-cent rally from current levels in corn is not an unreasonable possibility. I think it's reasonable to target $5 July futures as a legitimate place to make sales and put on hedges. But you know, many people think that we can't rally that far, and they think we're just going to continue to erode and erode and erode. I don't think that's how things work at all, but I think we can certainly go back and revisit and probe below last week's lows. I just don't think we're going to go anywhere. So for producers, once that bend door is closed, you got the crop put away, I don't think you're going to make moves to make sales 5, 10, 15 cents above where it is right now. That's not going to be enough for you to be enticed to take corn out of movement and consider giving up on all future price potential gains. So I think that markets will go into the doldrums here, but it'll be well supported, and gaining downside momentum will be limited. And I think producers need to have orders above the market to make sales, but I think he needs to be patient. Until you get into the spring and you feel that the crop is off to a good start or going to be off to a good start, I think the pressure on producers is going to be minimal to make sales. That should keep cash firm, basis firm, and I think your bids will reflect that. So I think from a producer standpoint, you're patient. From a trader standpoint, I don't think there's a lot of opportunities for short-term traders here, and probably won't be through the end of the year. But I think there are some longer-term opportunities to play for a corrective strength. I think beans will be dependent on South American weather. Everything's fine, so that's dialed into prices. You'll get support from technical and fundamental crowd, 25 cents lower than where you're at on Friday. So markets are going to be overall well supported, and given time, I think you're going to get a decent corrective rally. This is a little bit short because this is actually the third attempt to broadcast this. I'm traveling, and for whatever reason, I get timed out on my internet connection. So for the DPP Grain, this has been Duane Lowry. Thank you.